Guys, Marlon Hamilton here again with another trading video, and just to show you how I go about analyzing the chart, and also, as I said, this journey and becoming successful at trading binary options. Now, what I'm going to be doing is I'm going to take you through the process, the entire process of how I'm doing this, and remember, all of this for free. So I'm going to take you through this journey and how I go about trading binary option. But now the initial stages of this understanding process and what you've got to do to analyze the charts, and as I'm building a strategy live and taking you on the journey that I'm on. Okay, so let's have a look now, guys, and see what we've got here now. And remember, guys, this is live. I'm doing this thing live now. What I'm doing here is I've got all my indicators on the chart. 1, 2, 3, 4, and these indicators. So what I'm looking at, I'm just looking at how, because this is my signal there, that's my signal, but then I'm taking the signal when this breaks this point here, and I'm taking the signal when this breaks there. So so one of the things I'm looking at is is when this thing breaks, what's happening to the RSI, stochastic, and my other indicator, what's really happening. Okay, so at this very point here, okay, and this very point here when it breaks again, and when do I take these trades? Now, the optimum trade would be to look there or to look there. No, do I use the stochastic to help me to take the trades? Because what's happening here, this is making far lower lows, right? Lower low, but this thing just remain within the over sold position before then it breaks here, and then we've got an uptrend. Now, is it that what I should be looking for is when this thing breaks, yeah, then this must be below, that must be below, that must be breaking for me to take the trade, and I use the cross as my signal and use this as my signal, or I look to use the stochastic. But the more and more I trade this strategy, the more I'm looking and I'm saying probably it's better if I use these are moving averages, so the moving average crossover, and that's what I'm looking at. So I'm comparing the moving average crossover when compared to the stochastic, because these two are my entry, and I just look for these two either below or above the zero mark. Okay, so these are either above or below. This one is the moment, so this is almost like a forward indicator. So if this is below, then I want to go for the down. If this is above, then I want to go for up. Yeah. No, but if you notice here, right, while this breaks here, this was above, okay, and is it that I'm supposed to be using particular values to help me to make sure that I've got a higher probability? Because remember, what I'm not trying to do here is to find a holy grail or anything. What I'm trying to do here is to find something that's going to consistently make profit. Now, if my win rate is over 75%, then I'm in good. I would be in a good place. But my biggest challenge now is to see how this breaks compared to this breaks as my entries. Okay, because we have already established these are leading indicators, because they sort of lead with the market. They sort of flow with the market. If you notice, this is below, we get the signal there. This is above, we get the signal there. So it's just making sure that we sort of just be in sync with each other and how we go about taking these trades. Okay, so what I'm going to do now, let's go into so here again, it's better for me to take a sell trade if it's below, right, using this, and it's better if I did that. Now let's see, and because look, this would be like a counter trend if I was to take the cross there, and look, so many times I would have had a cross there, I would have been in a challenger. Okay, guys, so this is where we are now. I'm just going to be looking at the other charts. I'm going to set them up, and I'm going to be paused as I go and sort out the relevant charts. Okay. Okay guys, this part now we've got a crossover there. Market went down nicely. The breakdown there. This was below. That was below. That was below. Okay, that would have been a winner. Market break up there. But then when the market broke up there, this was in over bought territory, so probably wouldn't be wise. So then you want it probably when it's about just breaking the 50 zone, which this line here represents the 50 zone. So you probably wouldn't want to chance it to cross over here if the stochastic RSI is over the 50 mark. No, the stochastic RSI basically is just an overbought and oversold indicator, and that's just sort of combine them, right? So this one probably no. Okay, so what we need to be doing then, we need to let's have a look again, right? We had this crossover here. This was below it, well, provided that it wasn't in below 20, then basically, this pointing down, that's pointing down, that's going down. So then this possibly would have been a winner as well. So this is what we're doing. So what I'll be doing is I'm just sort of shaping and forming this thing. So I'm just going to pause the video. I'm going to write down my findings accordingly. So therefore, this now today, guys, will be a trading strategy that you're going to be following. We've got the data here now. Let's use the data and build on it. Okay. Right, guys. Here's a strategy. For put, sell, lower trade, called buy, higher trade. So we've got, this is the stochastic RSI. The other one here is the momentum. The other one here is the RVGR, which is the relative vigor index. And then we've also got the relative volatility index. So these are, and then we look for the cross there. So as I'm saying, this bit, it can't be below 30. If I'm going to, say for example, this is where the trigger. If this marker here was below 30, then, I don't want to take that trade, because this is ultimately going to be where I'm going to take the trigger, right? Okay, here's where I'm going to take the trigger now. When this trigger is announced, if this thing is above 70, then I'm not going to take the trade if I'm looking for the up move. Okay, so it seems like I probably would have got into these trades here. Okay, but it can't be below 30. So it's just some strict rule and strict discipline that we've got to follow, really, for a buy trade. And we can just move these lines accordingly, because I'm using the 3-minute chart. Okay, so what I'm going to do, let's look at another. Okay, so here we go. This one, we wouldn't have taken this trade. This one, yes, would have taken this one. Yes, would have taken this one, but wouldn't have taken this one, because if you look when the trigger occurred, it was when it was above a certain value. This one here probably wouldn't have taken this one because of where it is at the moment. Okay, let's see where we are. Let me pause the video so I can just set up this chart. I'm just going to pause the video and set up a number of other charts so you can see what the structure look like, and also put the structure on each tick sheet on each page as well. Just give me a minute. Okay guys, I'm just still looking at the structure itself, looking when there's a break. And just one thing I added to here, which I need to add, is just we need to add the period. We're looking for 9 minutes expiration. So 9 minutes expiration, that means the trade will expire in 9 minutes. Okay, so and this is over a number of research over a number of years of trading binary option, is that the best way to do it is a minimum. If you trade in a 3-minute chart, then there should have a minimum of 9 minutes, or 3 times, between 2.5 and 5 times. I wouldn't really go over 5 times, to be honest, in terms of expiration. So if you're doing the daily, you're possibly looking at between 2 to 5 days. If you're doing, you know, trading on a daily time frame. Okay. So that's where we're at now. So I've showed you everything there. This one would have looked good. This one will get a trigger there. Would have been looking good. Okay. This one was slightly over though. Okay. Let's look at some more. Right, where is the trigger in this one? So we got the trigger there. Okay, yeah, looking good, looking good. Got the trigger there, but look at this height here. That's too way, you know, it's almost overbought already. We want the trigger just right. Also for the buy, you know, this is below. That's above, that's fine, that's above, yeah. But for one, it's just in overbought territory. And we don't want to be trading it when it's there. Okay. Now I've looked in a number of these, and the strategy look really good. So, you know, as I said, I'm going to be showing you these live trading. Sometimes when you see people doing these things live, real, then you become more comfortable, become more confident. Now I will be doing a live trading, so I can get people to do their live trade as well. But anyway, God bless, and hope you've learned a lot from how a professional trader go about, you know, analyzing a strategy, going about, you know, I'm looking at over 35 different times. I've looked at different settings and just been non-stop looking at the charts. Now, you know, for example, you know, look at Lewis Hamilton, you look at, you know, Roger Federer and these guys, you know, these guys when they were younger, Serena Williams, Venus Williams, you know, these guys have been practicing from their babies. They've hours and hours. You know, if you want to master anything, you've got to put the time in. You know, you've got to put the time in, and that's what I've been doing. And that's the reason I'm able to do these things now with ease. So have a good evening again, guys. Subscribe to my channel if you want continuously updates of videos that I'm doing. God bless, and stay safe, and have a lovely Easter holiday.